Welcome everybody. The basics of swing trading, part 1C, okay? Part 1A was an overview, part 1B was charting, part 1C is scanning. And it will lead right into part 1D, which is watch listing. Now I'm going to show you how to scan for companies. This leads right into building a watch list. But let's say you're starting from scratch and you understand how to read this now. You know that these colored lines here are moving averages. You know that this is the relative strength index and it's a momentum indicator and you should only have one on your chart. You know that this is the MACD and that it's a trend indicator. It also has some momentum obviously built into it, but it's a trend indicator. And you should only have one trend indicator on your chart. You know that you should only have one volume indicator on your chart. You know that these are just indicators. Unless there's a good catalyst, the stock price will not head higher. You know this because I've taught this. You know that below the 30 line on the relative strength is an indication of being oversold. But it's also very easy to see in the price action, which are the Japanese candlesticks. When a stock retreats for a considerable period of time and it's down 30, 40, 50% in a couple of weeks or a month, it's obviously clear as day without the indicator. Even if you just take it off the chart, it's pretty much common sense that it's oversold. You understand how we try and position in oversold stocks to catch the bottom and play the reversal. You will understand that short sellers bet against these companies and ride them down and make money on the descent, but they have to buy back. At some point in time, they have to buy back. And the simple supply and demand tells us that if there's more demand than there is supply, the price will go up. So if you have people like me who are looking to buy the bottom, and you have short sellers who make money on the descent but have to buy back, all right? If you don't understand that, you will. Short sellers have to buy back, and they're looking to buy back when they're up big, and usually being down 50% if you're short, all right? Being up, you'd be up, okay? The descent following 50% means you're up 50% on your money. A drop like this is big. They're going to be looking to buy back. How do we find these charts quickly? Well, there's a couple of ways you can do it. You can build out a watch list if you have time, and you can study 50 to 100 companies. That would be my recommendation. Or you can go hunting. Now, reading through news websites would be the slow way of doing it. Simply jump on the Wall Street Journal, you log in, and you read through the headlines. That would be the slow way of doing it. The fast way of doing it would be to scan. I'm going to show you very clearly how I scan two different services for the stocks that could go into my master watch list, or just for additional ideas. Everything here is pretty basic. This is a 52-week chart. I like to see the last year because I want to see if there's a history of it doing what I think it could do. There are a lot of charts that just had down, 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 and they never have volatile bounces. I want volatile histories. A history of snapbacks that can make me quick money fast. Boom, 5 to 10. Love it. Continuation pattern, 850 to 1130. Love it. Notice how the range on the oversold pattern, 550 to 10, is better than the continuation pattern, 850 to 1130. We were talking about how the continuation patterns offer less range than the oversold setup. So when we're scanning, we want to see a history of a bounce. And then we want to learn something about the company. You should have that master watch list. But if you don't want to do a master watch list and you just want to scan, you can do that too. Okay? So, how do I do it? Go to the homepage of stockcharts.com. And if you look at the video lesson on the website, which is on scanning, I think it's video lesson number 4, it gives you the criteria that I'm about to show you. Go to the members page, click on Advanced Scan Workbench. Okay, it's that easy. Once you're in the Advanced Scan Workbench, you're going to copy my scan into here. So I'm going to go with the last intraday update August 3rd, 5:45 p.m. Okay? And I have two scans. I'm looking for oversold setups or continuation patterns. We haven't talked about continuation patterns yet, but basically think about it. A stock is oversold and it bounces, chops out, and heads higher. We want to buy the chop and sell the next move before it becomes a breakout pending chart pattern. These are the only two patterns that I alert. So let's just go with oversold for right now. Here is the criteria, and it is also in the video lesson, so you can just copy paste it into yours. You would just copy paste it in here and you would save it. Okay? You're going to add or modify a scan. You're going to add mine to your computer. Now, what this says very quickly is that it is a stock. The country is the US. The daily SMA, simple moving average, 20 daily volume is greater than 100,000. The RSI 14 is greater than 10, but it is less than 30. So it's oversold, right? That's all that says right there. The RSI is greater than 10, less than 30. It has 100,000 volume. It's greater than 100,000, which means it's going to give me a lot of illiquid stocks. Okay? It's going to give me a lot of illiquid stocks. But remember, a stock can be very liquid, and at the bottom, it might slow down with regard to its volume before it starts to get liquid again. So I don't want to exclude stuff. I can do it mentally, but this will give you some junk. Price is going to be 25 to 1. I've actually changed 25 to, it used to be 25 to 7. My service has evolved to 1 to 10. This is what I'm looking for now. Market cap, 50 million to 2 billion. It does the market cap. This 50 represents million and this represents 2 billion. Okay, just trust me, you can look it up, but there's your scan. Okay, so I'm actually going to add or modify this scan because I don't want stocks under $1 anymore. I'm just tired of them. And I'm going to save it. All right, so now I'm going to run the scan. And here are the oversold stocks in the market. And look at that list. Pretty attractive, right? And look at some of the names on that list. Pretty attractive, right? And if you've been with me for a while, you should automatically know what has happened to some of these companies and that you'll be buying soon. So we know that we're going to be buying Zynga soon. We know we're going to be buying Zipcar soon. I know this already. We know that we're going to buy MWW soon, Monster Worldwide. It's on the master watch list. We know we're going to buy RWI soon. There's no secret to my service. We know we're going to buy LDK soon. We know we're going to buy CEDC soon. Oh, I'm sorry, it's not on here. It was recently. Possibly ATPG. See, all these names should be very familiar to you. So now, you can scan to build out your watch list. You can copy my master watch list. You can do whatever you want. One thing I generally don't do, and I want to be very clear, biotechs I tend to stay away from. But they do wash out quite a bit, 70, 80%. The thing that I have found with biotechs, the nature of their business doesn't necessarily provide the best bounces. In other words, if they have fallen 60, 70%, usually it's a gap down on bad FDA ruling or something gone wrong with a drug. And that generally doesn't bring buyers back into the trade shortly thereafter. So I have found that the washouts on the biotechs don't necessarily work well. It's not that they go lower, but they don't bring in big bounces, okay? So let's start pulling up some charts. And I'm going to go with the companies that I know right now, okay? But you could look at them all if you wanted. Let's pull up some charts. Let's just go right from the beginning to start. Actually, let's sort it out by volume, okay? Let's look at the liquid stocks. Horrible news. Horrible, horrible news. Look at the snapback. This isn't one we would trade because the setup just isn't good. Based on the nature of the fall, it's not something I'm interested in for the swing trade newsletter. But 227 up to 405. I actually day traded this one and lost money recently, but I will tell you this. I also bought at 280 pre-market. I want to say on this day. It ended up bouncing and provided a nice return. But I was in on that trade higher, so I ended up losing money on that trade. But that was a day trade gone wrong. I will say this though, you can see that I bought pre-market and made some money at least on the bounce part of it. But not a swing trade setup that you'd want to be involved in. Zynga. Starting to look like something we would bet on, right? But where is the problem on Zynga? It only has one past history of bouncing nicely out of oversold, and that was just after the IPO. We know it's a different story on Zynga now. It's deep into oversold, but I'm not sure that this setup is going to lead to a good trade. However, it might be one that we try. Okay, worth a try. But see how it's setting up? See that MACD? So we can kind of predict that a bounce is coming soon. We might have a candle over candle setup, but it's been oversold all in through here. And look at, not a lot of nice bounces, right? They guided down. The outlook looks weak. So I would say probably no unless they get that casino license, right? So let's go back. So I just go back and I go through them all. I actually use two monitors for this, but you can see what I'm talking about. So look at that washout on Zip. And Zip has a history of bouncing, but not huge bounces, right? Not huge bounces. So will Zip be a trade? Probably. But will we expect a 100% run on this one? No, because it does not have a history of coming out of oversold and making big moves. Due to the nature of the drop, this will probably wash further and then set up. So we'll look for it around $5 a share. So this is what I do for scanning, and I know all of these stocks because I have my target market, 50 million to 2 billion, and I have my my history of studying them. You know, so I've got it funneled down into a scan that also matches up with the cocktail. So I'm not wasting any time. It's only pulling 50 million to 2 billion that have washed out, and now I just need to study the stories and know whether or not they could reverse. So look at Dendrion. Tell me that is not a perfect setup. Does Dendrion have a history of bouncing? Very nicely, right? So now we go hunting to find out whether or not this candle over candle sticks. People say all the time, Jay, what does candle over candle look like? You're looking at it. You're in at 445, you're out if it goes below 417. You want to be tighter than that? You're in at 445, you're out if it goes below the previous day's open or close. Okay, you can use whatever you want. What do you mean by that, Jay? All right, well, let's pull up DNDN and let's break it down even tighter. And this is what goes through my head when I build my watch list and I talk to subscribers. So the MACD isn't under it yet. Note that the MACD on this 100-day chart is going to be, let me minimize that. Note the MACD is going to be a little bit different on this chart because it's a long rectangle, okay, and I'm not giving it as big of a space. So if you want to see the indicator spread out a little bit more, you can do that by opening up a different chart timeline and a different chart size. This right here, see that set up on the MACD? Predicts the bounce. This right here is a little bit late. This would be a continuation pattern, not a washout. Probably a continuation pattern that we would play, or a pullback. All right, they're not always going to be buried like this one was right here, where it went from 12 down to 6 and then bounced up to 7. Not a huge bounce, but that's candle over candle. What do you mean, Jay? Candle? Well, the candle is above the previous candle. It's low, okay? So it's washed out and it's got that fish hook, if you will. And if we look at the price action, you can see it says 445 right there. That's the close on Friday. So now let's look at the previous day. What was the previous day? Well, the low on the previous day was 417. So you could be out if it goes below 417. Or you could use the previous day's close, which was 437. So that would be a break in the pattern too. That suggests it might drift back down to 417. Maybe you don't want to ride it down 30 cents. So, or 20 cents. Maybe you only want to ride it down to previous day's close. So in at 445, out if it goes below 437, which would be suggesting some weakness. Or you can make it even in between. So not 417, not 437, but what was the previous day's open, 425. So there you have 3 identifiable areas to get out of this trade. All right, I say it over and over again. The washout has occurred. It probably will do a secondary wash before it comes back up. But I don't know because I don't follow DNDN and it's a biotech. But having said that, let's just talk about the stops on this with candle over candle real quick. All right, because it all ties together. That right there, that top of that real body, that's the previous day's close. So this one opened above and went higher. That's your buy signal. That's candle over candle. We haven't seen it yet. We saw it on Friday. So that's your buy signal. You're in the trade. You're out if it goes below 437, which also happens to be the open. So you could just use the open on this one. I'm sorry, that wasn't the open. The low on this one, okay? You could use the 437 low as your exit. If it goes through the low a day, heck with it. I'm out of the trade. Or you could be more aggressive. You could say, well, I think it just needs to chop out. So I'm going to use the previous day's open as my exit on the trade, which we know from looking at the above numbers is 425. So 437, the previous day's close, also happens to be the low, okay, which is where it found support. Okay, so it dips, finds support, bounces back up, doji's out. All right, so it's starting to chop. And we say, all right, you know what? I'm going to scale in. I'm going to buy some here. I'm going to buy more if it goes to 425, okay? And I'm out of this trade if it goes below 417. So I'm going to take some at 450. I'm going to take some at 437. I'm going to take another chunk at whatever the open was there. So the open was 425, and I'm out if it goes below 417. So I'm scaling in, but I wouldn't want to do that. Here, this is all I care about. I want to see this thing curl and pop now. I'm not, accumulating down through here because I fear a secondary wash could be coming. I'm looking for a curl and pop up to that point, and I'm out of this trade, and that is what we do, man. There is your 5 to 10% rinse and repeat. There is your tight identifiable entry. There is your candle over candle. There is your washout, but it's not 50%. So be careful because it could make another drop. That is it in a nutshell, though, man. And I'm telling you, you can test that on so many stocks. It's unbelievable. I'm going to show you more setups. All of this is right in there. All right, does this one have a history of bouncing, gang? You see what I'm saying here? No history of bouncing. This chart sucks. I hate to swear on a DVD that I'm going to sell, especially when there is no swearing allowed at Jason Bond Picks, but this chart sucks. We don't want anything to do with this. There is no history of attractive bounces. And there's a history of being buried and oversold, slowly creeping up, only to go back to oversold. This is not a stock that we want in that $50 million to $2 billion category. I will never look at that ticker moving forward because I know I put it in my memory. NIHD, no. I don't care if it goes on 100% tear. It doesn't have a history. I can find better setups. Does Nova Gold have a history? Uh-oh. That right there, that, my friends, is sexy. Okay? But I want to see it happen every single time it's oversold. Okay? And this one only does it once. Does it do it the second time? Nope. Does it do it the third time? Nope. I can find better. Will it bounce? Yes. Will we trade it? Possibly. Will it be one of my favorites like ZAG? No. Why not? Because ZAG bounces pretty good almost every single time it gets buried. I'm talking about buried. When it's deep into oversold, does it have a monster move? Because remember, I'm trying to make this easy for people to follow. I want a 30% move on these bounces so we can get that 5 to 10%. Possibly, if we're lucky, get the bigger move. So that's what I'm looking for, and that's what we're looking for right now. And this is how I scan. And it's a slow and tedious process. History of being buried and bouncing? Not so much. Not in a 1 to 4 day period of time, right? Or not in a 1 month period of time. History of oversold and kind of slowly climbing. Volatile chart? Sure. It's kind of like KCG. Volatile chart, could you win on the trade? Yeah, but it's for day traders. Leave it to day traders. Halo, I think we just looked at that. ATPG. Double out of oversold. Double out of oversold. What has it been doing lately, though? Lately, the bounces haven't been as attractive, right? Lately, the bounces haven't been. But this one is deep into oversold here. It's been down here for a while. Possible bankruptcy. We know that that's been rumored, right? We know that that's what caused this washout here. So be careful. That's what I have to say on that one. We know there's rumors on bankruptcy out there. MWW. Really like this company. So yeah. Oh man, oh man. That, my friends, is a Mona Lisa of Jason Bond picks. Volatility at its best. $2, $3 per share on a regular basis. You just got to time it right. Candle over candle, though, is not attractive, right? I don't like a 50% spread in the candle over candle, meaning the bottom was put in at 572. Yeah, it's candle over candle, but my stop loss is considerably lower. If I move on something like this, I utilize the low from Friday's price action as my exit. In other words, if I say, okay, yes, it's buried and I think it's going to come out of this and head higher, I'm using the low from that day, which is 606. So if I jump on this one, I'm not riding it back down to 572. No way can I afford to lose 50 cents a share on 10,000 shares. All right, so if I bet this one, I would do 5,000 shares. That would be 30 grand. I'm not willing to lose 2,500 just to test the double bottom. It's not worth it to me. The washout is in. The snapback occurred. Probably drifts lower before it heads higher. Here's what I would look for. Drift down to 572 and at 580, play the bounce back up. This is a volatile bugger with a beta that is really attractive, I bet. Okay? MWW. 2.45. See what I'm talking about? We want 1 and above. Beautiful. Wheelhouse stock. $700 million company, 2.45 beta. Market cap matches up. History matches up. This, make no mistake, is in the master watch list for a reason. Okay? Priced out of Jason Bond picks reach here. Come back to baby. Baby, come back. All right? This is what I do. It's like, come back to me. Come back. I can't wait till you come back to me because I'm going to make money on you. That's what I want. I don't want it up here when it's at $10 a share. It's out of my service price range. I want it when it comes back to $4 or $5 a share and I time it, and then we'll trade it back up. Okay, because Monster Worldwide's probably not going out of business, right? So that, my friends, is what you want. All right, now we just keep going through, and this is scanning, man, and this is the whole service. And you're like, really? This is your service? Yeah, and guess what? It's growing pretty fast. And yeah, people come and go, and you might be one of those people. But the bottom line is, what I'm teaching works, and whether or not it works for you depends on application and how you apply yourself. History of bouncing? Yes, please. History of coming out of oversold, 741 to 1084. Look at it down here. 785 up to 12. Yeah. This is nice. 710 up to 9. This is nice. Let's let it get buried. Let's let it set up. Go test the water. Looks like with a stock like this, though, it might be more than a 1 to 4 day hold to get a decent return on your money. Right? Might be more like a 1 to 10 day hold. 7 to 9, $2 a share on a $7 stock. I prefer to see it, more like JVA where it really runs 100% on a regular basis. But this, yeah, Logitech, it would be on the list. I use their products. I like them. I don't like this. Oversold, no bounce. Oversold, no bounce. But we did have a 50% washout, right? Simple move into the gap, 50 cents a share. That's all you're looking for. People are like, Jay, you only look for 50 cents? Yeah, just do the math. All we want is a quarter, 50 cents, and in best case scenario, a buck. It doesn't matter what price range we're trading, unless it's like a $7 to $10 stock. Then we're looking for $1, okay? But most of my stuff is 3 to 7. We're looking for 50 cents because we can throw $30,000 at it. All right, we can buy, basically we're usually buying like 5 to 10,000 share chunks. And what you're trying to do is get 50 cents on that. If you get 50 cents on 5,000 shares, it's $2,500. Last I checked, that's cheddar. All right, you get 50 cents on 10,000 shares, that's $5,000. The whole service is wrapped into how we can try and get 50 cents. And when it washes 5 down to 265, pretty good chance of getting 50 cents, right? Pretty good chance of getting a buck here even. If it came up to 4, it wouldn't shock me to cover that gap and get back to 380 to 425. And it's like, this is so simple, it's unbelievable. Are they going bankrupt? Will they attract big buyers? When do I buy and make the trade? What I should do, I think what I might do, is stop doing everything else and only do the oversold and continuation patterns. No day trades for me moving forward. And I think what I'm going to do moving forward is just, maybe start with a $50,000 portfolio and track every single trade, and let's see if I can get that $50,000 a year. I've already proven that I can do it on a larger portfolio and it's working. I might start from scratch and list and track every single trade and show you how this works. Okay, how losing 200 to 300 from time to time is okay, because when you hit the $2,500 to $5,000 winner, it adds up. I think I might do that. Mark my words. So if you're watching this later, you're probably going to already see that if you're a client. All right, so let's keep going though. I know this is redundant, but this is what you do, my friends. Okay, this is what you do. This is what I do, and this is how you build out your list. If you know nothing about the stock market, a lot of these companies are what you use. Logitech is probably your keyboard right now, okay? So once you get comfortable with these companies, oh, looky, looky. Okay? Does it have a history? Yes and no. Yes and no. Can I get 50 cents here? Would I be looking for 50 cents on a stock like this? No, because I'm going to buy more shares. I'd be looking for a quarter, and I'd buy 20,000 shares. You see what I'm saying? So if I get a quarter on 10,000 shares, I made my 2,500, but it's a $1 stock. I'm usually putting 30 to 50 grand on a trade. So if I pick up 20,000 shares, that's what? You know, about $30,000. And if I get 25 cents, I just made 5 grand. Simple math, right? Where's the resistance on this one? Right there. This is money. But did it come out of oversold nicely last time? No. Did it here? Okay. Not great. Okay. Can I get a quarter on this one? I'm pretty sure. Are they going bankrupt? I need to check. Do they have possible news of an offering coming? I need to check. Okay? But is bad news probably factored in soon? Yeah. So even if it doesn't come out of oversold, there's still some opportunity there. You know, and just one by one. Let me show you some of the ones that I know on here that I'll be trading, okay? We're not going to go through them all, but you know, I can tell you right now, Zynga probably. I'm just not a big fan of Zynga anymore. MWW, yes. I can tell you that this will be an alert soon. I know that. This will be an alert soon, okay? Let's go down the list a little bit further. TRWI. It's going to be an alert soon. Some people from the service have already tried to, they tested this bottom. Some people made money on it. All right, it didn't confirm, but they made money on the bounce. Others stopped out for a small loss. You can see it clear as day. This is going to be an alert soon. Why? You know why now. If you've been sitting here this morning, you know why. And you can do this with or without me. They're going to go with or without us. You can see that it has happened in the past, and these weren't alerts by Jason Bond, right? So they go with or without us. Some people are like, oh man, the stock's running. You alerted it and it's going up. And it's like, that's the point. They're like, I missed it. I can't help that. There's only so much I can control. I'm Jason Bond, not Superman. All right. I'm not going to go any further with this. I think you get the idea. I will say this. We go back to the members page, Advanced Scan Workbench, drop in the last intraday update, and go with continuation pattern. It's no surprise what I'm looking for. Relative strength index between 50 and 70. All right, flip this out. Let's just make it simple. Let's see what's trading between 3 and 5 in continuation patterns. I know we haven't talked about continuation patterns much, but look, 3 to 5, everything else is the same. Boom. Run the scan. Here's some ideas. Narrows the field real nice for you. So depending on, you can get what you want here just by adjusting some stuff. Continuation pattern. Hero. What do you mean continuation pattern? It's not oversold. It's out of oversold, and it's not overbought. It's continuing up the chart. Right? So here's an example. Oversold, almost overbought. Nothing in between. Chopping out right in through here, it gets volatile. So breakouts are usually when it goes through like a 52-week high, or when it breaks out of a price channel. You could have said that 380 was kind of a breakout for this one right here because it got above 378, 380. So this is kind of like a continuation pattern pending breakout. Even though it's not like a 52-week breakout, it's a breakout of the recent price action. What do you mean, Jay? I really wish you would elaborate on that one. Well, it's your lucky day, my friends, because I'm in a great mood. Why would I be in a great mood? Because I love what I'm doing. All right? I love what I'm doing. And guess what? When I started this, I had 10 subscribers. I loved what I was doing when I didn't have any subscribers. And I love what I'm doing now that I have a lot of subscribers. That's a continuation pattern. Study Steve Neeson's book. It's as clear as day. wash out into oversold. Jason Bond, baby. Boom, blow it up, 50 cents. Blow up Bond. You got to love it, right? You can see why we do this. There's your, it tries to make bottom, secondary wash. I talk about them all the time. It pulls back to support, flush, tries, I can't do it. Flush again, snap back, and now it's in. You know what I say? It's like your friend breaks your trust by doing something really stupid. All right, so your friend just betrays you and breaks your trust, and you're like, oh, you get really mad at your friend, and you're like, should I, rekindle the relationship? And you're like, you know what? Screw it. I can't believe he did that to me. And, you get mad again, and the price goes down, and you're like, maybe I should call Bob back. You know what? That guy really pissed me off. And you flush again, and then you're finally like, all right, maybe I'll call Bob. And you call him. But you're like, nah, and Bob's like, man, I'm so sorry. You want to go to dinner or get a cup of coffee and talk about it? We've been friends for 30 years. And you're like, I'm not ready for that yet, Bob. Talking to you on the phone has been fine, okay? And then, some time goes on and you're not as mad. So you have a higher low, okay? And you're like, maybe soon, all right? You talk about what went wrong. You're like, you know what? I forgive you, Bob. But then, it creeps back in your head, and you're like, oh, that guy really pissed me off. But you have a higher low, all right? It's fading. Your anger for your friend who betrayed you is fading, but you're not ready to go have coffee with them yet or go to the bar and have some beers, right? So you're testing that resistance. You're like, Bob calls again, and, you're like, all right, you know what? What he did wasn't that bad. Higher low, okay? You're feeling a little bit better about it, and then, the continuation pattern is happening. Yeah, I'm feeling, you know what? Let's go get some beers. Screw it. We've been friends for 20 years. You really pissed me off with what you did, Bob, but I'm over it. Let's go get some beers, high or low. You set the date, and boom, you go get the beers. The continuation pattern has completed its course. Your friendship is getting better, and if your friendship really accelerates to going on vacation again, you break out, okay? You have a breakout moment. But right now, you're in a continuation pattern. So continuation pattern, pending breakout, and now it's a new trading range. Previous resistance becomes support. In other words, you're willing to go have coffee with Bob. You're willing to go have beers with Bob, but you sure as heck aren't ready to go on vacation with Bob yet. Okay? So you're not into a new high, but you're in a new trading range. You can see the relative strength is getting near overbought. Okay? So you're a little bit outside of your comfort zone. You didn't want to go have coffee or beers with Bob, but you broke out of your comfort zone. You guys are hanging out again, okay? So Bob and I are hanging out again, and we're trading up and through here. When we get up here, man, we're overbought. We're not ready for vacation yet. We need to dial it back, scale it down, come back to where I'm comfortable, and retest those waters. Continuation patterns are harder to trade, okay? They're harder to trade. This here, it's easier to identify. Continuation patterns, you buy support, you sell resistance. Okay? Once resistance is broke, it becomes support, and you go from there. So this is a continuation pattern. This is an ascending wedge, call it an ascending triangle. It has to have like 3 to 4 troughs. The more troughs it has, and the closer it creeps up on that channel line, the shorts finally give up. Okay? And the buyers come in, they play the breakout. So continuation pattern, pending breakout. You'll hear me talk about it all the time. Okay? And they're choppy, but it's clear as day what's happening here. Higher lows, 291, 307, 322, 335, until you and Bob go get beers. Higher lows. All right? That's the easiest way that I can explain. I'll play continuation patterns, but I will not play breakouts. In other words, I'm not buying right here at this resistance line. Usually, and if I do, I'll only buy a third of my size in case it comes back to the trend line. I'll pick up another third of my size, and then once it breaks out, I might add some size. But if you buy here and it pulls back, all right, if you bought at 361 because you thought Bob was ready to go have beers, wrong answer. You're down 50 cents on your trade. You think that the third time is a charm and Bob's ready to go yet? You were wrong. Bob's still pissed. You're down 50 cents on your trade. Don't buy the resistance. Buy the support, sell the resistance, at least take half off the table if you buy the support trend line. Take half off the table, play the breakout. There's a million different chart patterns. Pretty much the only one that we're looking for is ascending wedges or ascending triangles, okay? That's the continuation pattern that we like. They're very predictable, all right? Once we've beat it up, all right, and taken the money off of the bounce, it's clear as day. I just showed you on another chart where it's going to bounce to, and you can see that this one did that. Previous support, okay, becomes resistance on the bounce. And it takes a while before it gets through that support. For whatever reason, that's the way stocks work, all right? Depending on how long it was at that support could determine how long it takes before it can get through that support. There's a number of factors, but the strong market on Friday combined with the higher lows busts it through. All right, somebody else's pain is our success, my friends. Okay, so you see video lesson number 1 or oversold chart pattern, and now, see, I can see this without drawing it though. All right, if you're new, you look at this and you're like, it's so confusing. I don't get it. And that's okay. I've been doing it for a decade. You will get it. There's nothing else to my service, but it takes time. And it's not a cheddar factory until you learn how to apply it and act disciplined, and don't day trade if you're not ready, and don't do stupid things like penny stocks or ETFs and ETNs that you don't know about. You know, learn from my mistakes, follow this system. You can see clear as day that this works. This simply works. And it works more than it doesn't. And you can get out with a small loss. And you don't have to be in the market forever. And if you want to be out because you think the market's going to reverse, you have the opportunity because it's 1 to 4 day. It's not your investment advisor saying, we're in it for the long haul. It's okay your portfolio's down 10%. I promise you, John, it'll be okay. All right? The market always outperforms over a long history. What if it doesn't outperform in the 30 years you're in it? All right, and that happened to a lot of people. They were in it and everything was good right up until they retired and it crashed, and now they don't have time to get their money back. This does work, whether you apply it as a strategy where you come and go or you apply it as your main portfolio. It does work. But if you gamble, you will lose. Okay, I'm positive on that. I've gambled and it usually leads to losing. This is what has worked for me. This is what has allowed me to gamble and still be profitable, just so you know. Where I've made my money is applying this right here. Where I've lost my money, every time I go and gamble is when I lose my money. I bet on earnings, I win one, I lose bigger on the next one. Moving forward, this is all you're going to see out of Jason Bond. Because my service has grown so big, I don't have time to do anything else. And I know it works, and it's what people are paying me for. All right, so that's it. Again, study Steve Neeson stuff, because you study Steve Neeson stuff, and here's what's going to happen. You can plow through information much faster. You can be like, all right, you know, I know exactly what's happening on these charts. Remember, I said these are all continuation patterns. You can see it clear as day. What's happening here? You know, what is happening here? Boom, finally oversold off the bottom, continuation pattern. It's chopping out. You see why the ranges on continuation patterns aren't as attractive? The ranges aren't as attractive on the continuation patterns. They're just not. That's why these oversold patterns can work. But is this one that has bounced nicely off of oversold in the past? No, it doesn't have a history of coming out of oversold nicely, which is why it's not necessarily an oversold, but a continuation pattern. Yeah, because it does put in some big candlesticks lately. So these big candlesticks could mean an actual reversal in the company, and if that's the case, then we can get some 5 to 10% winners out of it. So remember, this is continuation patterns now, but you know, usually they were oversold before they become continuation, right? They have to have been oversold to now be continuation. You see what I'm saying? Oversold, oversold, continuation pattern. Look at how this continuation pattern blows up. So good history of some volatile moves out of continuation patterns and oversold patterns, 178 to 267. You can get your 25 cents there. You can get your 50 cents there. So it has a history of some volatile moves, but now it's in a continuation pattern, higher lows. I can draw that all out of my head real quick. So I try and teach customers and clients to do the same thing. So, you know, and you just power through the charts. And then what happens is over the course of 3 or 4 years of doing this, you know who Tiki Tankers is. Okay? You know who Tiki Tankers is. And now you just have to time it right. If it's one of your favorites. So I have this, I probably have 100 in my head that I can just rattle off. And when I see a major headline that says it washed, I already know it because it's on my watch list. And now I say, okay, you know, I put on my bib and I get my fork and my knife and I'm like, it's dinner time, baby. I sit down at the table and I look at my steak. And I just keep looking, keep looking, and keep looking. And when the time is right, man, I dig in and I, start throwing stake down. And it tastes good when you win. That's what you want to do. Okay. With that in mind, we're going to close down 1C, and we will return to finish this up with watch listing 1D